we don't treat fraud as importantly as we do money laundering.
I've never heard anyone call it FATF.
Those are the two key industries that are really going to be vital when it comes to sharing information and data.
That's our duty as a consumer, I think, to protect ourselves and those around us as well.
Having a UK national reimbursement model does not fully work.
That's really interesting, but I do want to play devil's advocate because, of course, many fraud cases for these banks goes unreported, right?
It's tricky. It's very, very tricky.
Hello and welcome back to What the Fraud, a podcast by Sumsub where digital fraudsters meet their match. I'm Thomas Traniak, currently responsible for some of our very exciting partnerships here at Sumsub, the global verification platform helping to verify users, businesses, and of course, transactions as well. Today, we're going to explore the growing issue of fraud in the digital world, discussing the role of stakeholders and tackling this complex issue. I will answer a critical question here today with our guest: who should be responsible for preventing and addressing it? Helping me unpack all of this today is our guest, Jessica Cath. Jess is a financial crime partner at Thistle Initiatives, a compliance consultancy firm in the UK and EU supporting regulated businesses. Juggling multiple clients like a pro, Jessica creates risk-based strategies that fortify financial crime defences and keep businesses thriving. With a passion for crime prevention and a knack for simplifying complex processes, Jess makes protecting businesses easier, smarter, and of course, way more cost-effective. So, Jess, welcome. Great to have you on What the Fraud. How are you today?
I'm very well. Thank you very much for having me, and what a glowing introduction.
So, as I touched on, global online fraud losses are indeed on the rise. They are becoming more complex and more costly every single year, with billions of pounds lost on an annual basis. So it's no longer an isolated issue, and understanding who is responsible is more crucial than ever. So, Jess, from your perspective, what are the most pressing challenges in fraud prevention today?
The challenges are very, very difficult because they're very, very far-reaching. There's a number of different issues and challenges with the fast pace and change of fraud. So fraud itself, in terms of the typologies, change all the time. We have fraudsters really ahead of the game in terms of using deep fakes, in terms of using deep fake photos, deep fake voices, lots of challenges. So a lot of our traditional control mechanisms very, very quickly become outdated given all of these changes. And then on top of that, we have pressing commercial challenges. So particularly in the UK, a lot of businesses are struggling to spend the appropriate amount of money on building effective controls. So it's looking to try and address an ever-changing challenge in a really tricky commercial environment. And that's the balance that I try to set when we're having conversations, is how do we build things as best we can and as effectively as possible, but also taking into account the fact that your business needs to still run. And I think it's those are the two challenges we're seeing a lot of.
Who do you think bears that burden? I mean, whose primary responsibility is it to tackle this? And why do you think that, Jess?
I mean, this is a fun question, actually, because pretty much everyone is responsible for preventing fraud. The traditional responsibility has always been, let's put it onto the banks, let's put it onto, well, now, of course, we've got the mandatory reimbursement model for payments firms, but the banks have really been holding this up for a long time. So the traditional view is, if it's linked to fraudulent payments, let's make sure that it's the bank's responsibility for sorting this out. But ultimately, there are so many other players when it comes to fraud prevention. So if we look at it, lots of the fraud comes from tech platforms. So social media platforms, marketplaces, TikTok, Snapchat, Instagram, Facebook, Facebook Marketplace, all of those are really primary sources for a lot of fraud that takes place. And at the moment, there's not a lot of responsibility on these players in order to try and stop fraud at the source, which is the challenge. And then, of course, you've got on top of that, you've got governments, you've got regulatory frameworks. They also need to play a bigger role in preventing fraud. We can break these down a little bit more, but ultimately all of those players do. And then on top of that, the final player is people themselves, because we need to be responsible for our own payments.
Of course. But I'm getting from that, Jessica, that you don't think it should be the onus on one party to burden this responsibility as well.
Not at all. No, it really needs to be a combination of all of these. But the current strategy, with the focus just on pushing the responsibility back to banks and financial services, means that we don't have a joined up approach to fraud prevention and actually wider financial crime prevention. We always think about fraud in a silo, but actually the proceeds of fraud are, of course, laundered through different ways and different means. So it's linked very closely to money laundering. But ultimately, all of these need to be joined up in order to try to prevent fraud. So if you take a really good example, I went to an FCA sandbox piece where they were looking at APP fraud data and trying to create much better alerting mechanisms for customers. And that was much better when you had data coming through from telecommunications, when you had data from social media platforms. So when you were trying to prevent a customer from making a fraudulent payment, you could provide them with an alert that says, not only that we believe this to be a fraudulent payment because I'm the bank and I can see all of these behaviors and therefore I think it's fraudulent, but actually if you layered on top something that said, this phone number is actually connected to 20, 30 accounts in different institutions. And we can also see that the phone behavioral patterns, like only outbound phone calls, that's a really, really strong message that says this is probably not a normal person that owns this account and owns the connected phone. So that's a much better alerting mechanism. But of course, it requires a joined up approach and is something that you can't just get from banks and financial services firms trying to do this. But I also do think there needs to be a little bit more responsibility put back on the customer for trying to really think through and be responsible for the payments that you have made.
Putting the onus on the customer, of course, Jessica, is always the most difficult part, right? Making sure that people can watch their own backs. And over the recent years that we've seen, would you say there's been a change in the distribution of responsibility from these actors? It sounds like more companies are joining forces, more entities are joining forces to spot these trends and make sure, well, at the end of the day, they're protecting their license, their business, their shareholders, but also their users and applicants as well.
There are lots of initiatives where firms are trying to join forces, but it is very challenging. Primary challenges are GDPR, privacy, data sharing concerns. I know we've been talking about data sharing for about 5 years, and it's very, very boring to still be talking about it. But to have a joined up strategy, we need to have more firms sharing data and being comfortable sharing data. We do have, I think Meta announced at the start of October, the initiative where they are sharing data with 6 other banks and trying to look at sharing that information and intelligence much more efficiently between that group. But again, that's all the 6 largest banks and one player. So it's not everyone. And it doesn't involve some of the smaller payments players who are seeing a lot of fraud on the front end. We did also have a recent update from the ICO, which did set clearer expectations on data sharing, particularly in the context of fraud prevention. But you still see a lot of people, struggling to get it over the line with their legal teams who are saying, no, we cannot share anything due to privacy concerns. And I think that comes back to the responsibility of government setting the tone and the framework. So we do have flexibility to share information for financial crime purposes, written into the new Economic Crime and Corporate Transparency Act. But it's setting the tone and the expectation that you do use these flexibilities to actually go and do some of the data sharing that we need to do.
So from the policymakers' side, of course, there needs to be a prompt so that industries, verticals feel more able to share, right? From your perspective as well, do you think, are there any specific verticals or industries that, where collaboration is basically essential for them to thrive and stop fraud?
Yeah, I think so. I've mentioned before, it has to be the social media companies and telecommunications. Those are the two key industries that are really going to be vital when it comes to sharing information and data. Um, I mean, if you look at all of the numbers, the social media platforms and marketplaces are the key sources of fraud. So we need to bring those into scope.
When we're talking about these social media companies, these marketplaces, which are more prone to fraud or more targeted, let's say, by these groups, do you believe, of course, that the monitoring is more important than the initial onboarding of these users and these actual, these applicants?
That's actually a very, very great question. Um, so, no, controversially, no. Um, a lot of people think of fraud prevention more in the monitoring space. So, really looking at monitoring for behavioral patterns, anything that's out of the ordinary. Um, well, they should also be sharing intelligence and looking for information and monitoring against information from other sources as well. Monitoring is absolutely critical, particularly when you want to stop outbound and inbound payments. And the inbound bit's the bit that people aren't monitoring very well. So we're seeing a lot of outbound monitoring, and the inbound monitoring is the bit that needs a little bit more work. But lots of people are, of course, looking at monitoring in terms of fraud prevention.
Mm.
But effective monitoring is only good if you really understand who your customer is. And again, this is a very, very boring thing to say, but if we look at the KYC acronym, it's actually knowing your customer. And it's easier to say this when we're looking at the investment space or private banking space, where you've still got that really good interaction with your customers. But in a retail payment space where you've got really, really fast onboarding, you need to be able to ask the appropriate questions in order to have a streamlined onboarding journey, but actually still know your customer at least a little bit in order to understand what normal behavior should be for that customer.
When you're saying knowing your customer, it's knowing what they've been, where they've been, and what they're doing now. Not only that snapshot, but furthermore everything that they could be doing in the future.
Yes, and it's pushing that a little bit further. So the classic know your customer is knowing who they are, verifying their identity, all of that good stuff. But
Mm.
adding to that is knowing your customer's normal swipe patterns on their phone, or knowing how they log into their device. All of that can be captured. Of course, that flows into the monitoring process as well. But knowing all of that up front and starting to build that dynamic picture of the customer is really, really key. So there are a lot of kind of biometrics that you should be capturing. If you don't need to know your customer and their full profile in that traditional sense, there are a lot of things that you can at least know from a biometric perspective that that customer is who they say they are.
There's one thing capturing all that information, analysing it, but if you're not sharing it with your counterparts within the industry or outside of it even, it can be quite difficult. And I think that's where government policies and regulations will play a foundational role in preventing fraud. From the get-go, I mean, there's often a lag behind the fast-paced evolution of digital threats that we see on the market. Prevention seems to be more of a reactive approach rather than a proactive approach, even in places with strong regulations like the UK. Jess, what can governments do to get ahead of fraud? I mean, rather than just responding after it happens, is it even possible?
It's tricky. It's very, very tricky. We have seen some good moves, but again, they've been more reactive. So we've had the recent failure to prevent fraud guidance that came out, but that was a long process for them to come out with that guidance. So it came out through the Economic Crime Act, took a long time to produce the guidance. By this point, fraud typologies have moved on, and it's not a huge clause anyway. Only specific large businesses fall under that failure to prevent offence anyway. But if you look at it from a fraudster's perspective, they can move so much faster. We have a lot of crazy fraud typologies where you've got massive crime groups running full fraud as a service offerings. So, you know, scam houses in Southeast Asia, which have full criminal gangs, people that are human trafficked into committing scams and becoming scammers. It's actually impossible for a single government to start dealing with fraud nationally. When we look at these international crime groups, we need to get better at cross-border anti-fraud prevention. So I think geopolitics, and there's a wider thing to play here in terms of international fraud prevention. But when it comes to simple things nationally, I think within the UK, we don't treat fraud as importantly as we do money laundering. So we still treat AML, money laundering, as the key problem and offence. We've got all of our regulatory frameworks really focusing on preventing money laundering. So I think the first step nationally is to start treating fraud as seriously as money laundering. Really pull that failure to prevent fraud offence into wider scope, and make sure it's better than the failure to prevent bribery offence. When that was launched, we haven't seen many offences come out on that. So we need to actually make sure there are a few offences from this new failure to prevent fraud. And then the final thing nationally is getting a digital identity system in place. So we've been talking about this for ages, the digital identity and trust framework. Not quite into force, not clear on the direction of travel, but not having a digital identity in the UK is a big loophole for fraudsters. So that was a long answer, but hopefully starts with the international picture, because ultimately fraud is not national. But then when we start to look at the UK, there are some clear measures that I think the government could start to do.
Definitely. And when other countries, of course, look at the UK, they are often looking at some of the policies that we implement as well. I mean, the UK has created compensation schemes which will benefit fraud victims. I mean, on a global basis, if let's say other governments and policymakers are looking at the United Kingdom, do you think they should adopt some of the programs that we have? And what challenges might arise if they do or don't?
Yeah, this is an interesting question. We know that Europe is looking at similar measures. They are looking at the new APP fraud mandatory reimbursement model in the UK and considering adopting something similar alongside PSD3, which they are still working on at the moment. Having a UK national reimbursement model does not fully work, because we see a lot of cross-border fraud payments leaving the UK. So when we're looking at having an effective reimbursement model, having it just based in the UK is not that effective, because of course a lot of fraud goes overseas and the proceeds go overseas. So we do need to look at this beyond UK borders, and we'll have to see what happens with Europe when they start to look at PSD3. There was one other thing I wanted to raise on that one, though, which links back to something we were talking about in terms of fraud not being taken so seriously compared to money laundering. So globally, we have, of course, things like the FATF grey lists and blacklists when it comes to how countries are preventing money laundering and having effective frameworks for anti-money laundering. I wonder whether or not we could put something similar in place when it comes to fraud globally. So actually setting the standards and defining a bit of national accountability for fraud prevention would at least set us on the right path, but we are nowhere near that yet.
100%. I've never heard anyone call it FATF as well, which is always an interesting. I mean, they've released quite a lot as of late, of course, with the travel rule and some other some other very, very poignant sort of points which are being implemented by different policymakers, especially the UK, of course, by 2025. But when we're talking about actually this compensation that we addressed just now, I mean, could businesses actually pass these costs to consumers and businesses? I mean, is that a good idea? How can, let's say, charging a higher price or finding other fees actually affect this? I mean, can we find a balance, Jessica?
So some firms are already applying a compensation fee, and we have a limit applied to that. So yes, some have already said they are doing that. As to whether or not we're going to see any other impact, I think what we will see is firms looking to reduce their risk appetite when it comes to certain customer types. So instead of, layering on more and more fees, what they will start to do is, if they are seeing a higher fraud typology in a certain type of customer, they will just stop taking on that customer, or they will only allow that customer to have access to a very reduced set of services. instead of having access to the whole product set. So I think we will see some fees, but more likely we will see a change in risk appetite, which is not what the UK government was trying to achieve with this policy, because of course their whole messaging has been around vulnerable customers, access to financial services, and in the theme of consumer duty, that's not their aim. But that's where I think we'll probably see the changes.
What can users do to protect themselves on the basis here? Because we're talking about sort of the macro level, let's say policies which are being implemented, the effects, and of course what businesses should do. But everyday consumers are being affected. So what would be your advice, Jessica?
So this is a really difficult one because fraud is constantly changing and even more difficult to spot. So because of deep fakes, fraudsters making use of banking music. It sounds exactly like your bank when you're speaking to a lot of fraudsters. They know how to make things look and sound and feel very much like the real deal. So it's very, very tricky. But my main piece of guidance is to have good digital hygiene, make sure that you are doing your due diligence. And I never click on any link ever. So never click on any links. Make sure you go to the original websites. Make sure you do your due diligence. And unfortunately, we've just got to a stage now where before you make a payment, trust no one.
I completely agree there as well. I mean, digital platforms have reshaped both education, work, shopping, your day-to-day life as well. So when do you think is the best time to start teaching this, let's say, personal hygiene around cybersecurity and acknowledging digital threats? I mean, should it be part of business education for their user base, or do you think it should be part of something much grander, i.e., let's say, a government initialized plan?
So at the moment, a lot of the education and awareness schemes are again pushed back on banks and financial services to provide awareness and education for their customers. So a lot of banks, of course, have to put warning notices or training messages or produce training videos or training emails to ensure that their own customers are made aware of the risks. But it needs to start much, much earlier than that. So this should be something that's brought right through schooling and then brought right into the workforce.
Agreed, and I think I speak for a lot of people when it's boring to do, right? To go through some of those educational videos, sign off on the small print that you're looking through as well. But that's our duty as a consumer, I think, to protect ourselves and those around us as well. So thanks, Jess. So much insight just there. So really enjoying discussing all of this with you today. Let's get back into it after we look at what's going on behind the scenes at Sumsub. This conversation highlights just how complex fraud prevention is. It's not just about individual actions or isolated industries. It's a system-wide challenge. And speaking of staying informed and, of course, proactive, if you're looking for more expert insights and strategies on tackling fraud, the Sumsubber is a fantastic resource. It's packed with articles that dive into the latest fraud trends, from tackling identity fraud to navigating complex AML regulations in high-risk industries. You'll also find compliance digests, regulatory updates across multiple jurisdictions, complete guides and practical tips for businesses and, of course, individuals as well, all written by Sumsub's team of experts in compliance and anti-fraud. So you can go and check it out at sumsub.com/blog. And if you're enjoying this episode, I think you'll find it super valuable. Back to today's guest, Jess Cath, a powerhouse in financial crime regulation and compliance consultancy. Jess, we've just discussed what governments can do to stay ahead of fraud, but let's now look at another role of businesses and individuals. How do you think companies should adopt a proactive anti-fraud measure beyond just setting up a web page?
So anti-fraud measures are not just the simple things. Unfortunately, we have to step back and think about the entire end-to-end flow of fraud prevention. So very, very boring again, but I would really look at starting with a good risk assessment, because a lot of firms still don't really understand how they're exposed to the risk of fraud. So you need to start with understanding who your customers are, how they're most exposed to fraud, but also explore that beyond just your customers and think, what about insider fraud, employee fraud, and how your entire business is basically exposed to fraud. Once you've got that in place, you can then start to build effective controls mapped directly to that. So, we've talked a little bit today about some of the controls when you're dealing with onboarding. So, when you're looking at customer facing fraud, really understanding who your customer is, not just from a name perspective, but looking at their biometric behaviors, their phone patterns, and then really mapping that against your monitoring. So, really having effective transaction monitoring, monitoring where customers are, who is accessing their phone and device, does it look like them when they are doing a transaction? So, all of that is the full end to end flow of customer monitoring. And it needs to be mapped all the way through that journey, right from initial onboarding through to transactions and checkout and ongoing monitoring.
Completely understand that. And from the perspective of obviously implementing anti-fraud measures, you've got a playbook. You understand the customer profile, the applicant profile, and who's in there and who shouldn't be, right? But at the end of the day, how could these companies actually implement the educational, let's say, schemas to, well, such as gamification, social media, and other elements to engage these applicants, these customers, and make it interactive in a way which they'd understand fraud prevention as well and how to protect themselves?
I agree with you around educating customers and the need for customer awareness. And again, education and awareness works best when it's dynamic, when it's tailored to the customer, when the messaging is very clear. So, for example, you could have an educational video utilizing some sort of Instagram influencer who is really known for young people and then build the education campaign off that. Yes, that would be great, but that's expensive, it's complicated. And ultimately going beyond the response where I think the responsibility lies for banks and for payments firms and financial institutions. So yes, that's the best way of doing an education campaign is to make it very bespoke, make it interesting, use moving pictures, use videos. But ultimately it's unrealistic for some firms who, especially for those smaller payments players, do they have access to the resources, to the funding to be able to build all of these very complicated awareness campaigns? I'm not sure.
How can transparency for these banks, these fintechs, actually help to reassure customers around the digital services?
So when we looked at, there's a piece recently, and I can't quite remember exactly where I read this, but trust in financial services as a whole is quite low. So that's what you're
Yeah.
alluding to, that people don't trust the whole financial services industry, but people do trust their bank. So they do still trust their bank. And I do think that even though the impression and the perception is that banks are not transparent and we don't trust the industry, people do still trust their one or two main banks or providers that they use. And that, of course, is actually exploited by fraudsters. So I think there is enough transparency and trust between direct relationships with direct customers. Of course, there's a lot more that we can do. And we do have, of course, a lot of new reports that come out on an annual basis to show reimbursement numbers. And that's all clear and transparent. And it's in the public domain for people to go and read and look at. So I personally think we're probably quite transparent and there is enough trust with your specific bank.
That's really interesting, but I do want to play devil's advocate because, of course, many fraud cases for these banks goes unreported, right? Especially smaller incidents as well. So would love to ask you, Jessica, why do you think that is if they have a lot of trust in their bank in terms of individuals reporting or lack thereof, rather, of reporting fraud? I mean, even if it seems minor.
Great question. And I don't think it's down to the banks. This is more down to reporting entities and investigatory bodies. So if we take action fraud, for example, which is the main body where people report instances of fraud, it's very unlikely that anything's going to happen after you report that to action fraud. And that's one of the main routes. Now, of course, action fraud is being completely revamped and relaunched next year. And we wait with bated breath to see what that's going to look like. But at the moment, if you have been a victim of fraud, your main route is to report it to something like action fraud, and it's very unlikely anything's going to happen. So why would you report it?
Having these intermediaries to report fraud is, it makes it difficult, right? I mean, there are technologies which make things easier, but what sort of technology do you think, Jessica, has the biggest impact on the reporting of fraud in the future? And what risks do you think they bring as well? I mean, do you see anything that is a game changer in the near future for this type of, let's say, reporting?
So in the reporting space, we just need to have a joined up approach. So we have really clear reporting mechanisms for suspicious activity through SAR reporting to the National Crime Agency. But when you're looking at specific fraud circumstances, of course, if it's a suspicious flow, you're going to report it to the NCA. But you've also got other institutions that you might report to, like action fraud. There needs to be a joined up approach. And the technology that's required there is actually sitting on the back end at the NCA itself, so that they can really consume all of that data, pick out all of those criminal groups and behavioral patterns and networks, and then really investigate and start to get some more of the money back from these crimes. However, on the banking side, on the payment side, and on the financial services side, when it comes to technology, there's a lot more that we can utilize when it comes to identifying instances of suspicion. So that's if, for example, you have a mule account and you're looking through for flow of funds and you're looking for the laundering of the proceeds of fraud. And then, of course, there's more technology you can use at the point of transaction when you're looking to try and prevent instances of fraud in those milliseconds, which is very hard. And then, of course, there's more technology that you can use at onboarding when you're looking to stop, fraudulent identities and that kind of thing. So there's a lot of really amazing new technologies that are coming out, particularly in the biometric space, which I've mentioned at the start of this session. For example, you've got biometric vein scanners that could be used as part of your onboarding journey, which is much more effective than a fingerprint, although you might then get into some conversations about whether or not people want their vein pattern scanned. And then on the top of that, you've got, of course, different machine learning models that people are using in really exciting ways to try and spot those instances of suspicion very, very quickly. And we're seeing a lot in things like synthetic data sets. So using anonymized synthetic data sets to go in and train these models. Of course, that means that even if you haven't seen the typology in-house, your model can be trained on something that it hasn't seen using this synthetic data. So those are a few things that are quite exciting. But of course, on the flip side, there's a lot of exciting technology which the fraudsters are also using. So it's difficult to keep up.
It's difficult. And as you rightly said as well, you need the data to actually make a solution better, right? But looking ahead, do you see a future of digital fraud prevention evolving massively beyond that in the next 5 to 10 years? I mean, will responsibility continue to shift as we look at implementing new onboarding and safety sort of barriers or moats around these businesses?
It's going to shift massively. So it already has shifted massively in the last couple of years. We've had the government's big fraud strategy, a lot of announcements. The mandatory reimbursement model has been a big shift. And we've got a lot of new technologies in order to prevent this. I really do see this as a big shift change from just focusing on AML and really looking at bringing fraud into the limelight. It's 40% of all of the UK's crime. We cannot not do something about this. So there will be a very, very big shift in fraud prevention efforts. And we've seen it in-house here. So we have a lot more requests to support on the building of fraud controls, which we hadn't before. They were more focused on AML. So fraud being the kind of weaker, younger brother compared to AML, that's changing massively. And that's really driving the direction of travel for fraud prevention.
Definitely, and some great points there, Jess, as well. And as we've highlighted throughout this, you've shared a lot of experience around what you do on a day-to-day basis, dealing with these clients, which are trying to put in the right frameworks and make sure they are protected. But from your experience and looking forward now, if you could implement one change, let's say, to make the most impact in fraud prevention in the coming years, what do you think it would be?
Gosh, this is a very, very difficult question. And you've put me very much on the spot. I'm going to be really boring. And for most firms at the moment, they still don't understand what fraud is and what their fraud exposure is. So they just need to strip it back. So instead of trying to jump straight into really fancy AI tech, just strip it back and understand what your fraud is. So we deal with a lot of firms that are in very different industries, and fraud for Coots is very different to fraud for a small payments firm. And you need to understand what that is before you start building controls to prevent it.
I've really enjoyed this episode. Believe me, it's not over yet. We've actually got the end of show 5 quick fire questions to get through, to get to know you a little bit better from our audience perspective. So are you ready?
I'm ready.
Jessica? When choosing a digital wallet, Jessica, do you go for more features or for better security?
I have lots of them for different purposes. So for the ones I use actually to make my transactions, I'm looking for more features. And then I then have layers of accounts, and I look for security at the one that's closest to where my money goes into.
Fantastic. Well, I think a very good answer, actually. But we're going on to number 2 now, which is strong passwords or biometric authentication. Which would you rather?
Biometric.
Biometric. It was interesting. We get mixed results from these from these answers. Number 3, is online fraud more about technology or human error?
I think it's still human error. Still a lot in the human errors.
It's part and parcel, I think, as well. But number 4, what's one habit you rely on to stay safe online, Jessica?
Never click any links. I think I said it before. Never click any links.
You have. Well, you haven't opened your email in a while. So. Number 5, if you could have any other career other than the one that you're currently in, Jessica, what would it be?
Oh my gosh, this is such an embarrassing answer because it's something that will shock you. But I have a love of big HGV lorries, and I'd probably be a truck driver.
A
Listening
cross-country
to
truck
podcasts.
driver.
Yeah.
That sounds quite therapeutic, actually.
Exactly.
They've created video games, truck driver video games, for that reason as well, and I've had a go. It's quite fun.
So have I, indeed, but don't tell anyone.
Yeah. Everyone's going to know now. This is going to be on the internet. Well, brilliant. Thank you so much, Jessica, for those answers. It's been an absolute pleasure having you on the show with us today.
Thank you very much.
So from vein scanners to deepfake tools, Jessica has given us so much insight into topical trends on a macro level, as well as an idea, of course, of what the future might hold, as long as companies across industries work together. So taking a step back to look at my biggest takeaways today. I mean, Jess has provided us with a great deal of insight into the world of fraud, and from that perspective, where the onus lies for responsibility on, of course, reporting fraud, educating users. I mean, is it really the responsibility of the company to make sure that the users are protected, with the pressure, it seems, on the individual rather than the licensed and regulated entity? And of course, Jessica has mentioned not treating fraud as important as money laundering from the government's perspective, and governments and policymakers need to do more. And of course, from there, the market follows. But the UK also needs to look at their digital identity framework and implementing this much faster, such as the DITF, to future-proof systems and safeguard individuals as we move forward. Right now, I believe we're looking at a gap. So when we look at where the responsibility lies, education of individuals is of course important, but companies must continue to implement and refine their fraud control frameworks, as well as the technologies they use to create a proverbial moat around their business to stop fraudsters. Businesses working together to help identify fraudulent patterns, typographies and behaviors to stop critical fraud types before, let's say, account takeovers, money muling and other frauds take place is essential. It's a changing landscape, and both companies, individuals and policymakers must continually learn and implement constructive changes to stay safe. Thank you for joining us once again on What the Fraud. So we're over halfway through Series 2 and there have already been so many revelations and interesting discussions. I can't wait to see what's on for the rest of the season. And as always, please like, comment, follow and subscribe wherever you're listening to us now. Any feedback, of course, that you do have is incredibly helpful and also makes it easier for other people to find us. So if you want to hear more about what we do at Sumsub and how your business can benefit from our verification services, definitely check out our website at sumsub.com and subscribe to our socials.